What's going on YouTube? It's Sankey and I make videos on the stock market. Guys, as always, I've got a jam-packed one for you today. But before I get cracking, if you don't already have a Trading 212 account, check out my link down below, sign up and grab yourself a free share of stock. So as we close out this year and head into next, it's time to start thinking about what growth stocks we want to invest in to get ready for 2021. Now, we're going to have a fantastic year in the stock market next year, and it all starts with these plays that I'm about to give you. Now, I've got 10 growth stocks for you, ranging from trillion-dollar companies right down to single-digit billion-dollar companies. The trillion-dollar companies are important because they're going to act as the glue for your portfolio, right? They're going to act as the security. The single-digit billion-dollar companies, they're going to be the high growth opportunities, and you want a blended mix of the two. Now, do remember, you can buy fractional shares. You don't have to buy the full share. Some of these stocks are $200, $300 a piece. Now, I have had messages from you guys saying you don't have the money to buy that. Do make the most of the fractional shares through your apps. Now, without further ado, let's jump into the first play. Up on screen we have Lumentum Holdings, that's ticker symbol LITE, currently standing at $96. Guys, this one is shaping up to be a very interesting play going into 2021. What Lumentum Holdings do is they manufacture laser components, and we know in today's world laser is used in a lot of different applications, right? Now, one of their biggest clients is actually Apple, and what they do for Apple is their technology, their lasers are used for Apple's Face ID as well as Apple's augmented reality on their iPhones and their iPads. So this is sophisticated technology used by a $2 trillion company right now. Now, one of the most exciting things about Lumentum is they work with LiDAR, right? And they've had an interesting breakthrough not too long ago, which means that potentially their technology could get autonomous driving ready sooner than later. So this is exciting news. We know we're currently in a race for autonomous technology, and that is set to kick off in 2021 and beyond. Now, I'm sure it's on all of your radars by now that Apple are going to potentially come out with their own electric vehicle. Now, if and when they do come out with that electric vehicle, we can be sure that they're going to come out with some very sophisticated autonomous driving technology. And we can connect the dots here now. Their technology partner is likely to be one of their existing partners, and we can see that in Lumentum, right? So there is huge opportunity, huge potential in Lumentum going into 2021. Now, I like this play under $95, guys. So if that share price drops under $95, do consider loading up. I do give them a price target next year going into 2021 of $150. So it's only right our next play is Apple, currently standing at $135. Guys, this is looking like a fantastic growth play going into 2021. They've got a lot of different arms to their business. Now, they just recently broke through consolidation of $130, and I gave you guys the heads up on this channel a couple of times before they did that. So anyone who jumped in, you're now comfortably in the green with Apple. Now, one thing we have to pay attention to with Apple is their service revenue. We know that Apple sell their watches, we know they sell their iPads, their iPhones, but their service revenue comes from their iTunes, their iCloud, their Apple TV, and that accounts for about 20% of their business. And it's a very important revenue stream going into 2021 because it's very sticky, guys. You know, I always talk to you about reoccurring revenue, sticky revenue, because that is so good for a company's cash flow. And we know that Apple is a cash-rich company. Also, that service revenue is very high margin. So going into 2021, we want to see more and more of that service revenue as a percentage of their total revenue. This is going to push their share price up further. Now, obviously, big catalyst going into 2021 for Apple would be any news on developments of their potential electric vehicle, right? This is going to have huge impacts on its share price, huge positive impacts on the share price. Now, I like this play under $132. So if you can get this under 132, consider loading up, because I think this is going to go all the way to 160, 165 next year. Next up, we have Maxera Technologies, that's ticker symbol MAXR, currently standing at $34. Another interesting play, guys. What they do is they create software which is capable of taking real-time 3D images from space. So you can imagine the number of use cases of this. It's mind-blowing. Now, just to give you a few, agriculture is one it could be used in, oil rigs another, for military and government purposes. Absolutely endless, right? So I like this play. Now, they have partnerships with Elon Musk's SpaceX. They've actually used the reusable rockets to send the satellites up to space, and they're in partnership in 2021 to have a constellation of 6 high-resolution satellites in space with SpaceX. So it's shaping up to be a very exciting business. And as I said, any announcement or any news on any of these updates going into 2021 is going to boost that share price higher. Now I like this play under $30, guys. If you can get it under 30, consider loading up, because I think this one's going to go all the way up to 50 in 2021. Up on screen, we have Roku currently standing at $336. This is another powerful play for you guys to enter going into 2021. This business just keeps going from strength to strength, and it's amazing to see their journey. Now, I presented you guys Roku a couple of weeks back, and they are already up about 20%. They are flying, right? And they've got the numbers to prove it. Now, Roku is a streaming business with millions and millions of active users. Up 73% their sales this year. This is phenomenal growth. Couple of more metrics for you guys. Their active accounts up 43%, their streaming hours up 54%, and their revenue per active user is up 20%. This is amazing numbers across the board. Now, we've got to remember, a lot of advertisers are now switching from TV to streaming, right? This industry is just going to grow into 2021 and beyond. There's going to be a lot more billions and billions of dollars in advertising spend going towards the streaming platform, and a market leader like Roku is going to take full advantage of this. Now, I like this play under $330. If you can get in under that, consider loading up. I do see this play going up all the way to $420 next year. Up on screen, we have Salesforce currently standing at $222. Another fantastic play to ride the wave into next year. Now, Salesforce create one of the most powerful CRM platforms on the market, used by a number of different businesses, right? It's a very powerful tool. What I like about Salesforce is they deliver for their investors year after year. They have a long track record of outperforming, and I don't think it's going to stop there. I think 2021 and beyond, they're going to continue to deliver for us investors, right? Now, Salesforce is estimated to grow by about 20% next year. Now, for a company of that size, this is very good growth numbers, and that's just going to push the share price in the right direction. They've recently gone ahead and acquired Slack. That's going to add to their business, add to their platform, and hopefully win them more customers and more market share, again pushing that share price in the right direction. Guys, I like this company under $220. If you can get in under that, consider loading up, because I think this is going to go up all the way to $300 next year. Next up, we have Broadcom, that's ticker symbol AVGO, currently standing at $428. Broadcom, they're a manufacturer of semiconductors. Now, we know how important this is for wireless technology and 5G, so they are well positioned to take off in 2021 and ride that trend upwards. Now, what I like about this company is they're set to do about double-digit growth going into next year. Not only that, Intel have come out and said they are potentially considering outsourcing the manufacturing of their semiconductors. So a key player like Broadcom is positioned to take advantage of this and win new sales, win new business, and all of that is just going to push that share price up higher. Guys, I like this play under $415. If you can get in under $415, consider loading up. It's going to be a good 2021 for them. I think they can get all the way up to $520. So up on screen, we have PayPal currently standing at $230. It's one of the oldest payment firms out there on Wall Street. This is a fantastic play that continues to deliver for their investors. I like a lot of things about them. One is they're set to grow about 20% next year. Now, for a company of their size, this is fantastic growth rates. Not only that, what I really like is they're getting more and more into cryptocurrencies, right? Taking advantage, utilizing the popularity and the rise that we are seeing in cryptocurrencies. Now, I want to put on your radar, there is over 20 million merchants worldwide using crypto, and PayPal is set to benefit from this if there's more uptake of cryptocurrencies going into 2020 and beyond. So guys, I like this play under $220. If you get an under $220, this is a good price point. I see this company going up all the way to $270, $280 next year. So consider loading up on some PayPal. Up on screen, we have Payload currently standing at $356. This is another cybersecurity play. We're already in CrowdStrike, we're already in Okta. We're doing well on those. Now we're going to add Payload going into next year. Now, cybersecurity, that industry, that sector is just going to continue to grow as we move through next year and beyond, right? Businesses and governments, they are prioritizing their network security, and they're turning to companies like these to help facilitate that. Now, Payload, they have some fantastic numbers, right? Quarter, their Q1 revenue up 20%, their earnings per share up 60%, right? This is a profitable business. I like to see this. Now, I think A good entry point is under $350. If you can get in under $350, consider loading up, because I think this is going up all the way to $430 next year. Up on screen we have Keysight Technologies. This is a testing solutions business. Their clients are in automotive, they're in aerospace, they're in communication and more. This is a fantastic play, guys. Very good financials. Revenue up 10%, their earnings per share up 15%, right? They're becoming more and more profitable each and every quarter we see, so we like to see it. Now, very acquisitive, guys. I told you before, we like companies that go out and acquire new businesses, add to their businesses, add to their portfolios, add their customer base, right? This is what we like to see. So they acquired a UK-based testing company for $330 million. Very cash rich, $1.8 billion, which should fund further growth, development and acquisitions. Now, good entry point is under $130. Jump in if under $130, because I see this going up all the way to $170 next year. Okay, so last but not least is Virgin Galactic, ticker symbol SPCE, currently standing at $23. This is a space tourism company, right? This is a very unique business with a lot of potential and a lot of potential catalysts to boost that share price. That's why I like this play. Now, they're currently standing at $23. They were over $30 not long ago. Now, they dropped recently because they had a failed flight. Now, we know that they're going to ramp up their testings going into next year and beyond, and any positive news off the back of their test results, right? If they're positive flights, we know this share price can easily get back up to 30 and beyond. There's a lot of bull cases on this for over $50. There's a lot of potential in this play to run up off the back of good news. So going into 2021, if we see successful test flights, I think this is going to send that share price skyrocketing, right? I think it can easily pass $50. There's a lot of interest, a lot of hype around this stock. So we want to load up. They're in the buy zone. Get ready, because I think they're going to do big things going into next year. So it's question of the day time. This question comes from Johnny. Big shout out to you, Johnny. Question is, what is going on with NIO? I've been stuck at 26 since November. So thank you very much for sending this in. Guys, if you have any questions or comments, leave them down below for me. So up on screen we have the NIO share price graph. Now, we know in November NIO had a massive run up in its share price and has since come back down, and it hasn't yet returned. So as we can see, what's happened to the NIO share price right now is it is consolidating, where it's just trading in between its support line, the black line, and its resistance line up here, right? The resistance line is around $48, $49. So that's why you will see NIO share price creep up to that $48 mark, $49 mark, come back down. Yeah, and you see the NIO share price touch the $41 and then come back up. So it's a very predictable share price movement, and this just gives us opportunity to load up, get our positions ready, because it is going to pass that resistance line very soon. All it takes, and I've said it before, all it takes is a catalyst, right? A catalyst and some sufficient volume in the NIO share price trading, and it will surpass its resistance line. Now, I want to draw your attention very quickly to Tesla. Tesla showed the same share price movement a couple of months back. We can see it was consolidating around the beginning to middle of September, trading in between this resistance and this support line, as you can see, for a couple of months, right? All the way up until the S&P 500 inclusion announcement, and then boom, share price is onwards and upwards, right? Now, during the consolidation phase of Tesla, what was interesting is a lot of people slept on Tesla, right? A lot of people forgot about Tesla. And now the same thing is happening with NIO. A lot of people are kind of putting NIO to the sidelines, forgetting about them. You gotta understand that NIO is a very powerful business, and when it does pass its resistance line, it's gonna shoot right up, and it's going to show the same kind of price movement that we've seen with Tesla. So don't sleep on NIO. NIO is still a fantastic business. It's just consolidating. Now, a lot of stocks go through this consolidation phase, right? Most stocks don't just rise indefinitely, right? It goes through a consolidation phase. And as I said, this is a great opportunity for you to load up, get your position if you haven't already, because it is going to rise next year. Now, there's some amazing catalysts coming up. NIO Day is one. The December delivery announcement could be another catalyst as well. And obviously any unexpected news that they bring out could also be another catalyst for that share price. So alright guys, that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do go ahead and hit that subscribe button. I post each and every day. And as I always say to you guys, check into the channel each and every day. Stock market is rapidly moving. You never want to miss a beat. So I'll catch you guys on the next one.